Well, let's maybe ask one of those or delve into one of those questions, because it has been
Sure.
certainly, a big part of the news cycle over the past month or so. And is this property, well, let's call it the Evergrande situation, which is, symbolic of bigger problems within the property sector. Bringing that back to the CBDC, I wonder whether this having a central bank digital currency gives the central authorities there the ability to merge fiscal and monetary policy a little bit closer. And what I mean by that is over the past few years, let's say over the past 10 years, and being in Australia, very cognizant of the fact that every time China puts its foot on the stimulus pedal, it stimulates fixed asset investment, it stimulates property, our iron ore prices go up, our commodity prices go up, and China has been happy to do that ever since 2008, and they've done that on and off for the past decade. It seems to me over the past sort of 12 months with this three red lines policy, they're trying to get leverage out of the property sector. They really know that that's not the way to keep going. And there's going to be an issue with, social stability down the track if they let this property boom/bubble go on, and they've got demographic issues that are all a part of that as well. So do you think the central bank digital currency gives them flexibility to stimulate in a more direct way rather than, yes, let the banks lend, let the local governments monetize land, and all goes into property? Can they direct money into the household sector in a more direct way?
Yes and no. Okay, so there's sort of two issues here. So the first is property in China. And people in China look as property as their primary means of saving and have done so for many, many years. And that's created a heated market. No question about it. I don't think that central bank digital currency on its own will be able to manifest such a large societal change that says, well, I'm no longer going to invest in property. Central bank digital currency does give and crypto people will not like this, and I'm saying that in advance, it does give the government some ability to redirect money, but remember, cash and normal bank accounts aren't going out of business. So there would be no need for a macro policy issue like real estate. It would be very hard for the Chinese government to say, we're going to use digital currency to control that. They will certainly use other policy mechanisms to control that are far more expansive and perhaps more comprehensive. And the government has done that to try to drive property prices down in certain areas with varying degrees of success. They'll try, there are 4 different cities. They'll try 3 or 4 different things in these cities, and some will work, some will not work. Some drive property prices higher, others help, and they're trying. But I don't see a near-term role for CBDC for such a macro cultural issue as a way of resolving it. And Evergrande is a problem. And let me speak to that just to say that Evergrande is a problem of excess debt of an individual property company. It is not the death of China. It is not an existential crisis for China. It is certainly a concern. It certainly concerns foreign investors who bought the debt. And, I have faith that China is going to work this out in some way. I'm not saying that I have faith that it's going to work out well for foreign investors. Nothing good to say about that.
Yep.
But this is not it's a problem. I would call it short of a crisis. Okay. But
Yep.
Yeah, it's a problem. China will work it out. It's manageable within. Remember, China is also a country with very high national savings rate. So there's this balance that'll make it all work out. I think foreign investors I have no inclination or no knowledge, just that I feel that the foreign investors are going to get hammered at that, because the first people in line for cash saving are those poor people in China who bought an Evergrande property and are now terrified that they're not going to get their house delivered to them. And they're first in line. Let's just leave it at that.
So let's move on to perhaps the bigger picture reason why China has gone down the central bank digital currency path. And to go back to our earlier conversation, you could say this has been a long time in the planning. If they gave the tech giants the licenses to get into banking in the first place, I'm assuming they knew that was going to lead to technological advancements in the payment system. Now we talk about China trying to get away from this sort of US dollar issue in terms of the international payment system. So I want to make it clear that you've said that this is not an attempt for the yuan to become a reserve currency or to usurp the US dollar, but they're trying to get themselves out of this sort of US dollar system. Do you think that's a fair comment?
Absolutely fair. There has never been an official from the PBOC, senior government officials. Nobody ever said, we're launching the digital RMB because we want to replace the dollar. Never a policy statement. Now, what you will read is that China wants to reduce its dollar dependence. Now, so remember I talked about internet memes. Ready? The internet meme. The central bank digital currency is a threat. It's going to kill the dollar. Yes and no. No, you're not going to buy stocks and bonds in central bank digital currency. You can look at a lot of investment products all across the world that are all valued in dollars. Not going to happen that they're going to suddenly change. So the dollar is fine. However, like a bucket with a leak, filled with water with a leak in it, what is going to happen is that money money for trade, particularly trade with China, because that's what China's good at. They sell the world stuff. That trade is going to start to revalue into digital currency and into RMB, both. And, that's something that we have to watch as we go forward. Now, I think I'm going to stop there, but I'll lead it with this so that you can ask the next question. The thing is, what you have to watch is it's not just China's central bank digital currency. You need to look at the central bank digital currencies that are on the table for Japan, Hong Kong, Korea. You can go through the list, and I will, to look at how many other CBDCs are coming.
Well, I think what you're saying there is it's almost disintermediating the US dollar from trade between that region, right? And they can just transact directly. I was going to say, perhaps you could just mention, and I found this fascinating part of the book as well. You talked a lot about the new blockchain-based trade finance systems that are developing between some of these near-term nations to China.
Absolutely. And this is really of critical importance to anybody out there who's a sort of classically trained economist. They think of currency, whether it's the dollar or the RMB, in terms of analyzing accounts. How much is outstanding, how much debt does, all of these basic things that gives you an analysis of one currency versus value versus another. The one thing that's the same between all these currencies is that they all travel on the same, what we call payment rail, SWIFT. They are transported. So if I look at Japanese yen versus the US dollar versus Aussie, we say, well, the economies are different. They're worth this much in relative value but we only use relative value in this classical analysis. China's digital currency will not change the value of the RMB. That analysis doesn't change. But what does change is the currency's utility. Now, let me explain. Suddenly, we're going to have a new payment system, a new payment rail, a digital, immediate, relatively, I wouldn't say free, but low cost, very low cost means of transferring payment across nations. Value number one. And now the big one. Why are you going to use central bank digital currency to buy a container full of refrigerators? Because I like refrigerators. You're going to buy a container of refrigerators and ship them to your country. You're going to use the digital RMB because by using the digital RMB, you will have access to blockchain-based trade networks that by buying in digital RMB, the digital bill of lading will be put on blockchain and they will fly fast track through customs, through shipping, and they will make the entire logistics process faster and easier. In cashless, I say the digital yuan, the digital RMB, is what I call an entry token to a smart logistics system that really the world doesn't know yet. And it's going to make buying from China as easy as buying from Amazon for people in the West. And that's what's coming. And these systems exist already. It's not like, oh, they're going to be built in 5 years. They're already at work down in Shenzhen, and they're saving a lot of money with shipments between Shenzhen, Macau, and Hong Kong. Big export triangle, a lot of business there. And these blockchain systems are already at work and already reducing trade finance costs, shipping time, and,
well, I was going to say,
easy.
It strikes me that the Western banks wouldn't be, jumping over themselves to get involved here. Is this another one of those cases that we discussed at the start of the conversation where the Western banking system doesn't really know how to handle this development?
I agree. The threat is underestimated. Here to anybody out there. So there's somebody listening out there who's thinking this. We don't want to hold the RMB. We didn't want to hold the RMB in our accounts in paper form last year. We don't want to hold it in digital form in 2 or 3 years' time from now, from wherever it launches in international. And my argument to them is as follows. Nobody's asking you to hold the digital RMB. What we're asking is, do you trust the digital RMB enough so that you can take, for example, US dollars, convert it into digital RMB, which would take all of about a minute on a digital platform, and then purchase your container full of refrigerators in about 2 more minutes. Now, a traditional guy buying a container of refrigerators is like, well, I bought the refrigerators. I have to have RMB in my account for the next month because, or that's an exaggeration, probably realistically a couple of weeks, 3 weeks, whatever, to clear all the customs, to then you got, the rate changed, so I got to add. Anybody who's a medium-sized importer is familiar with this. That's all going away. So I think that the Western governments and banks, not just the banks, underestimate this potential. They're not really cued into this yet. They're just thinking, and I actually read a beautiful quote from Hank Paulson, former Goldman Sachs guy, Treasury, and he just said the following: an RMB is an RMB, digital, it's not. And I agree with him. I'm not disagreeing. That's true. But you're missing what it's attached to. And that's what's going to be a big difference in perception, use, and value of this currency.
So what you're saying, it's effectively developing lightning fast payment rails that remove all the friction to do with international money transfers and all those sort of costs.
Money transfers plus the one thing that China can control. Look, China can't control the value of the RMB in international banking markets, right? They buy or sell RMB to try to peg the level. They have a national called a national team that does this, all right? But the one thing they have real power over is trade. and they can change the rules of export and digitize export. So yes, it's the digital transfer mechanism of cash, but it's also these digital logistics, smart logistics rails. And they're going to work with what they've got to be able to increase the amount of RMB in use, digital or otherwise, and it will hopefully for them achieve their policy objective of reducing dollar dependence. Not going to kill the dollar. But so it's going to happen, but it's not going to happen how most people think. Most people are like, oh, they're going to launch the digital RMB, and then suddenly people, no, there's no sudden in this. This is a long, China plays a long game. And that's what's behind, that's what you're going to have to look forward to.
Just with that in mind, I'd be interested in your thoughts as to what was behind the, I guess, effectively the takeover of Hong Kong last year. Do you think that had a bit to do with trying to maintain control of the almost China's international facing financial system?
No, look, Hong Kong has so many various elements to it that there's not much I can add to that. What can I say?
It's all conjecture, really.
There's a lot going on there. What value can I add?
That's fine. Let's move on. I've only got a couple more questions, and I thank you for your time. I know we've gone for nearly an hour now. Just a question over who has ultimate control of the financial system in a world of central bank digital currencies. Are banks still in the ascendancy, or will CBDCs give central banks and central governments greater powers? I'm thinking of programmable money, the ability to sort of, take money out of bank accounts, privacy issues, those sorts of things.
Well, let me address that very, very clearly. It depends on the design of the central bank digital currency. And what you will see is that no government, not just China's, Europe, other countries, are all going to tend to use what is called a two-tier CBDC structure, which sort of mirrors what happens now. Let's talk cash. Money is printed on a printing press. It's transferred to the central bank, right? So the central bank has got some vault somewhere where they got this cash. They take the cash. They give it to a commercial bank. The commercial bank puts it in ATM machines, gives it to bank tellers. They give it to you, right? That's a two-tier system. Let's make it digital. The central bank digitally prints money. They give that money to the commercial bank where you have an account, and your commercial bank releases that to you. All right. So this two-tier design is intentionally done to keep commercial banks in the loop. Now, somebody says a central bank could issue a direct central bank digital currency and completely cut out the banks. That is factually, scientifically true, but it is highly unlikely, other than a small island nation. The only guys playing with this are island nations where they have 100,000 inhabitants. That's it.
Yep.
But all populous nations, the central bank does not want you as a client. They're like, we're not in this business. The central banks do not want to, what I say, blow up the banking system. So they want you to have a digital currency. They want you to be able to make payment. They want the digital currency to contribute to GDP growth in the nation. They want direct transfer. That's good. They don't want to kill off their banking system, and it is all handled with proper CBDC design. So, ready? The following is an untrue meme statement. Ready? Here it is. central bank digital currencies will allow people to have bank runs where they remove all their money from their accounts and it destabilizes the banking system. You're kidding me, right? You really think in this digital world, you have $5 million in the bank, they're going to allow you to remove $5 million in CBDC tomorrow and destabilize Bank X, whatever bank that is. These are design constraints. So China says, okay, you can use central bank digital currency. There's a limit to how much you can use and take out at any one time because they don't want to blow up the bank system.
Yep.
So there's a lot of these hypothetical realities. Oh, hypothetically, the Central Bank of China could make bank accounts for 1.4 billion people and cut out. Yes, we have great computers. Technically, you could do it. There's no way in reality that any government would want these sorts of systems, and they will design many of these commonly internet meme kind of problems. They'll design them away.
Couple of final questions. When do you think the China CBDC will become a reality? I know it's being trialed in a number of cities at the moment. When do you think the broader rollout will occur?
As I say in my book, Cashless, I'm thinking of a very, very slow, deliberate rollout. Look, China has the eyes of the planet on them. They're the first major nation to launch a CBDC. They know that if they screw up or make a mistake,
it's not a good look.
There's another thing. So they're going to go for a slow rollout where the CBDC is rolled out in city after city, province after province, and there's a real reason for that. China has states. So if you're ICBC, I used to work at IBM in China in the banking sector for computers. So the ICBC bank, for example, they were not my client, so it's not privileged client information, but their banking system in Shanghai is not an exact duplicate of, say, the one in Beijing or the one in Shenzhen or a third-tier city somewhere. So there's a lot of custom design. They want to make sure that when they roll it out, it works, number one. Number two, they also are very aware that the U.S. is not going to be a fan of China's CBDC. You saw the TikTok ban. And everybody is waiting to see whether the U.S. will ban or block China's CBDC, even though it will not be available for use in the United States. Still, there's going to be political fallout from all this. So there's a lot of reasons why China will very slowly, methodically go for a slow roll on this. I do think it's going to be 2022, but I'm going for, I wrote that it would be maybe, first half of the year. Now I'm like first half of the year, third quarter, it's going to be, I think their goal is nothing short of perfection for this. And there's no incentive to rush. There's no disaster that they have to fix.
And what's your best guess for how long or how far Western countries will be behind that move? Are we talking a number of years still?
Yeah, look, there's even if, let's just say, the European Central Bank is the furthest along for major world economies. The US, they can't even publish a research paper on central bank digital currency. We've been waiting. It's been delayed 3 times. The MIT University research paper sponsored by the Fed, and it's been delayed 3 times. So you're looking at realistically about 5 years for a major economy to go from, hey, we want to do this, to we're turning it on. It took China 7. Well, they were early on.
Yep.
So and then you've got another thing to deal with. Even the day that Europe, for example, launches a digital euro, you've got another factor. China already had 7 years of digitizing payments. So doctors' offices, everything is digital here. And they did it over a 7-year period with WeChat and Alipay. So when it comes to launching The digital currency, they're like, okay, well, we've got this covered. Now we just have to go deeper. So they've got easily what I call a 10-year head start on this. No question about it. And that won't be easy for the West to catch up with, because people in the West are tied to credit cards. They are not thinking that their local coffee shop is paying 4%. Remember, this is this hidden tax.
Yep.
And it's not high on people's radar. It's just not there. So until the day your coffee shop says, I'll give you 5% off if you don't use a credit card and you use digital currency, that's when things will start to get interesting. But it's going to take a while. So China's got a big lead on this, and I think that we're going to have to wait a while. And
well,
I think there is something called first mover advantage for China doing this. No question about it.
Well, it's going to be fascinating to see how it all plays out, and absolutely fascinating to talk with you today, Rich. It was a real pleasure to have you on, and thanks for spending time going through everything with us.
Can I add one thing?
Absolutely.
I'm going to try to make it as fast as possible.
You can privacy. Take as long as you want.
Look, I just want to cover privacy.
Of course,
quick.
Yes.
There, again, it's on the internet, it's everywhere. China's digital currency is a dystopian nightmare. All right. Now, look, your CBDC in your country will not be the same as China's. China's, if you look at it objectively and see how the separation of names and data, it's all separated out, it's actually very well designed. Now, people say, well, we don't trust China. Well, that's not a technical answer that I can handle. But if you're living in China, and if you are using WeChat and Alipay, which everybody does, China's central bank digital currency marks a great improvement in data security and privacy over the existing corporate-controlled payment systems, which I quite like. They're good, but they're the equivalent of Facebook when it comes to data. I don't think I have to say much more. And that doesn't mean Facebook is bad or WeChat and Alipay are bad. They're not. They're great companies. I love them. But for most people in China, the CBDC represents an improvement on the levels of privacy. Now, for people in the West, I want to make this statement. Your levels of privacy through data brokers and through other sales of your data and information is not as good as you think it is. It is much more similar to China than you might want it to be or admit to. And my thesis is the following. Your central bank digital currency should, if it's reasonably well designed in EU, US, Oz, wherever, it should give you what it gave Chinese citizens, which is more privacy than you've got now. It will not give you Monero coin or crypto completely blind use of currency. That's not going to happen. Governments like taxes and other things. But it is not a dystopian future. It is an improvement in privacy for most people. So skip the dystopian stuff. You're going to live into a good future world with CBDC, and hopefully it'll make that peer-to-peer payment a breeze and make using money a much more convenient thing for everybody.
Well, it's a good point to finish on, and a very interesting take, because as I said at the start, I think a lot of people probably have preconceptions about what all this stuff means. But as you pointed out, at the moment, we don't have a lot of privacy if we're paying via our phones and credit cards, because private companies can access that data and sell it off to others. So
it's really hard. It's really, really hard to make that point. It hurts people. Exactly. and I'm sorry. And, I have people writing to me on social media, well, I trust my bank. Or I trust that when Apple security on Apple Pay says, we don't sell your data. They don't sell it. To which I reply, yeah, Apple doesn't sell it, but everybody else does, you know? So it's really hard to sort of, you know, I get it. Our payments are less than ideal for a lot of different ways. And I hope that CBDC can help make them better in some meaningful manner.
Well, thank you for helping us to understand it more and for sharing all your insights. It's been a great conversation, and would love to have you back down the track when we do see the rollout and get more of your insights then.
Greg, your questions are wonderful. I would be delighted to come back. You have 5-star questions. I do a lot of podcasts, and I absolutely loved everything that you asked. Very insightful. And to everybody out there, my book, Cashless, China's Digital Currency Revolution, is available on Amazon, Apple, a whole bunch of other online platforms, which I don't remember the names of anymore. And please, I talk about this every day on LinkedIn and Twitter. Connect with me on either one. Send me a message. Tell me you think I'm right. Tell me I'm wrong. But I'd love to hear from you, whatever your take is on CBDC and China. Love to hear from you. So thanks so much for having me, Greg.
No worries at all. Thanks again, Richard. Appreciate it. I hope you enjoyed that preview from New Money Investor. To get access to the full video and much more, please click on the link below.